Welcome to the daily update, where I'll go over the action in the market for Thursday, February 13th, and we'll see how things look for Friday, February 14th. Happy Valentine's Day. I'm recording this quite a bit earlier than usual, so the reason why I have to wait sometimes to record the video is to get the equity put call information. That's the last to update, and I don't have that in this video. I had to switch around my recording schedule for this particular video due to some other obligations, but we're turning more positive now. We're still not trending, but we're getting close to an all-time high. I know it seems strange to say we're not trending, but we're pretty close to a new all-time high with the S&P, but we've been just chopping around. Now, when I did the video yesterday, we were looking more negative technically. That's showing some improvement now. But what we were seeing is the smart money, and I have three different indicators that I follow. That's the institutions, though. That's the big trading outfits that really control the market. And you don't want to go against them. If things are going down and they're doing selling, yeah, we follow into that. But when they're doing a lot of buying, even if our technical indicators are not looking so good, we want to respect what's happening because they can change the market around from negative to positive quickly. We don't know if there's going to be more follow through with this because we're still not trending. We're still just kind of chopping around and there's a lot of uncertainty, but we are now looking more positive. Okay, so right at the open, we had a higher open. And Europe was having an interesting day, and that kind of bled over into the S&P futures. Right after the open, we climbed above R1 at 6,076. Then we hit resistance right around 6,090. We kind of stalled out there for a while. We retraced back down to below R1, and it looked like, okay, another choppy day, no problem. But then all of a sudden, after the open part of the market gets dealt with, then the smart money comes in and they start buying. And we were able to rise above R1, R2 at 6,100. We got above that 6,100 level and we closed at the intraday high. We've been watching 6,100 not only from a psychological standpoint, because the financial media and folks, oh, yeah, it's a round number that they can mention and it seems to have meaning. Most of the time it's psychological, but it had become technical because we had bumped up to that level and we were using it as overhead resistance. Well, we were finally able to break through that. We were up 1.04% on above average volume. Not a huge increase in volume, but it's still, we did see a pickup there. And we are positive in the short, intermediate, and long term when you base it around moving averages. We're still seeing some weakness in some of our other intermediate term indicators, and now our short term indicators are starting to show good momentum, but we're just not trending yet. We're still declining as far as the ADX. What really helped things is PPI came out and the market could have freaked out. They just chose to go higher and then twist around some words or what have you to justify, oh, well, PPI wasn't all that great. I mean, CPI came out, it was hotter than expected, and the market went down. PPI comes out, it's hotter than expected, and the market goes up. But then there's this rationalization going on. The market wanted to go up, and they were going to use anything and everything for that to happen. But what helped is interest rates are coming down, but we're still above 4.5% with the 10-year yield. Things could get even more positive if we're able to break through that. Now, in Friday's session, we're going to get retail sales, and we'll see. That's a big part of the economy, but the last number of months, there hasn't been a real big reaction to retail sales, but it's still a major part of the economy. And then, of course, there's the confirmations going on. There's Doge. There's the screaming and yelling on one side and the gleef gleefully happy partying on the other side. No matter where you come out, things are changing, and that's producing some uncertainty. And depending on who folks listen to, things are going to get bad. You listen to the other side, things are going to get good. It could get worse before it gets better. I mean, when you go through changes like this, there are going to be adjustments. And of course, anything that's negative, the new administration is going to get blamed for. Anything that comes out that looks favorable, the previous administration is going to get, they're going to be able to take the credit for that. It's just the way this stuff works. That's why we look at charts. That's why we look at data. And even though some of that data on the economic front can be manipulated, it's what the market uses to key off of. And so that's what we use to key off of as well. There's also some pretty big geopolitical things. There's an ultimatum delivered to Hamas that the hostages must be released by Saturday at noon Eastern time. What's that going to mean? Is the U.S. going to be involved? Is Israel going to be turned loose to do whatever they feel they need to do? So there's some things going on there. So there might be some hedging going on ahead of the weekend, more tariff announcements, more executive, who knows? Things are happening so quickly. Okay, so we did close near an all-time high in Thursday session. Not quite. We're not quite there yet, but the rally that we saw on Thursday was broad-based. Not only the S&P, not only the mid caps, not only growth, but it was pretty much spread across the market. PPI did come in hot, but all the news, it's like, okay, no matter what comes out today, we're going to say today is a happy day. Tariffs won't be implemented until April 1st. There's this negotiating going back and forth. And that's what's going on with the new administration. Things are thrown out there that seem preposterous, that seem way out of the box, and that's meant to negotiate and say, okay, get the other side. At least we're talking to each other. Now let's come to some kind of an agreement with these things. And President Trump is planning on having discussions with the Xi Jinping in China and Putin in Russia. This is more open-ended. This is just a statement. It's like, okay, yeah, we're going to cut our defense spending and go back to denuclearization. Okay, there's nothing really concrete about this, but the fact that folks are talking is taken as positive. Mega caps did have a good day. I'll go through the mega cap charts here later on, and we saw some good action there. And the parabolic SAR, that's one of the primary indicators that I follow. We've had the dots on top, that's negative. It's switched back to being positive after Thursday's session. And we're getting a little bit longer list here in the short term. We now have these short-term indicators, which are really touchy, and they've been just floundering around, not giving us any extreme positive or negative readings. Well, after Thursday's advance, we have the Stochc RSI, the Williams percent R, CCI 14 and 20, and stochastics. Those are short term. They're really easily moved either up or down. They're looking extreme now, which could suggest good momentum. And then we have our smart money indicators, which are positive: accumulation distribution, the Chaikin money flow, and the Chaikin oscillator. But they're looking extreme. They've been looking extreme for a few days now, showing that the smart money is really coming in and doing some buying. So we just want to be aware of that. They're positive, but getting a little toppy looking there. We also have a couple in the intermediate term. The balance of power is back to looking extreme again, and the Sean trend meter. Not really extreme with the Sean trend meter, just getting into that initial area. And I'll show you charts of all these things. And no change to the overall scenario, and the market is still anticipating a soft landing. I go over that chart mostly in the weekend videos that I do, where we use proxies of the economy. And when we're going up, the market's thinking, okay, a soft landing, meaning that we won't go into a recession, but still, there are other points of evidence that could suggest that we will. We just kind of watch these things as they unfold without trying to predict what will happen. And let's see, the dollar was down and interest rates were down, not under that 4.5% level yet, but we are at 4.54% where we had been at 4.64%. Sentiment is neutral. We got out of the negative area and we ticked back up to 47 where we had been at 44. And we're back to looking positive with the ADX. Now, we're not trending, but we have a down day. The red line crosses above the green line. We have an up day. The green line crosses above the red. That's what happened on Thursday. So we're looking a little more positive that way, but we're still under 20. We're still under the moving average. And the bias is positive with the update. I'm still keeping the momentum at mixed because we're still seeing some areas of weakness based on our indicators, but we're also seeing some strength based on the smart money. The economic reports that came out, PPI came in up 0.4% month over month. They expected it to be up 0.2%. The market could have just freaked out over this, but they chose not to. Last time it was up 0.4%. So it is actually down from the previous reading, and that was taken as positive. On a year over year basis, it's 3.51%, where last time it annualized out to 3.46%. Then when you take out food and energy, of course, the things you have to have, but they're very volatile, so they separate those out. We were up as expected, 0.3%, and down from the 0.4% that we saw last time. And this is kind of what the market latched onto to say, okay, we're going to have a happy day today. Year over year, we're looking at 3.61. The market really liked this, where last time it was annualizing out to 3.75. Initial jobless claims also showing the employment situation remains strong at 213,000. They expected 217,000. And the continuing claims came in at 1.85 million. And I have charts to show you there. So here is the PPI, the total, that's the blue line, still up, going up slightly here, where the core is actually coming down. And that, excuse me, and that was taken as positive. Then final demand year over year, where we're showing goods going up and services coming down just slightly. Intermediate goods on a year over year basis, we have processed goods going up and unprocessed goods are going up even more. So this is showing some strength here, but the market chose to see it as economic strength rather than inflationary for at least for Thursday's session. Then here's the chart that I look at going back on the year over year change where we are going up this way. This is the headline number, and a month over month change is going up. This is what the market liked, though. We're actually starting to decline on a year over year basis and also on a month over month basis. Weekly jobless claims coming down and the moving average is going down, showing strength in the employment sector and also flattening out here with the continuing claims. They did drop off, but the moving average is starting to level off and decline just a little bit. So putting them all together, we had the unemployment rate a week ago. That's down to 4%. Continuing claims just kind of hovering around, even though they did decline, and we're seeing an overall decline in the initial jobless claims. Here's Isabel Net, the overbought, oversold composite, coming in with this reading at 72. That's probably going to go up with the update that we saw on Thursday, but not necessarily an extreme reading. You might want to pause this and look at it. It says take away tariffs, which you really can't, so this isn't really realistic. It looks like they're going to happen, but that's also a negotiating tool, so there is a chance that the tariffs may not be enacted. And according to Goldman Sachs, they expect core CPI inflation to slow to 2.3% this year. Okay, tell that to Wednesday. Including tariffs, we forecast the year over year inflation to be at 2.8%. Still over that 2% level that the Fed is shooting for, but seemingly coming in more friendly. Equity sector flows, not a surprise here. Still seeing most of the money going into tech, even though there's been a decrease lately. And then financials. Banks have been coming on strong, but they've been looking pretty good for a while now. And as I always say, I was watching this back in 2007 going into 2008, and I saw the financial sector just crumble. That's why I keep a close eye on it, because then we went into the great financial crisis. And of course, by that time, news was breaking out and everything. But you could see some things in the charts actually starting to develop before it became headline news and turned into the big thing that it was. So, money going into financials, we like that. Now, some folks are probably chasing this. The idea that even though I really like the idea of buying into strength and selling into weakness, there comes a point where people are just seeing something that already went up. They're not catching it in time, so they get in at just the wrong time and they end up chasing it. So there's that fine line between getting in on the momentum side of things and doing enough analysis to try to foresee where things are actually headed. And we're seeing a lot of money coming out of healthcare right now, and energy is also taking a hit. Then U.S. profits rise. It's well above the 3-year average, but over the weekend I go through FactSet. They're kind of the earnings people, um, as far as giving us information. They do a 5-year and a 10-year average, and so how you look at these numbers. This is put out by Bloomberg, but it just says the profits are coming in strong right now. Demand for gold. We'll have to see how things go there. Of course, gold is going up now, and you've got a lot of countries that are starting to buy gold. Well, for some reason here, Bloomberg decided to put out India and China, and they've also been increasing their exposure to gold. Unemployment and underemployment rate, where we have the unemployment rate, that's what we had a week ago here. This is the dark blue line coming in at 4%. And then the U6, that includes everybody. And that typically will come in higher, and that's up over 7% right now. I didn't spend any time on Twitter because I needed to get this video going here. Here's the intraday chart. Now, if you go back to Wednesday, this was when CPI came out and we gapped lower, but we had a pretty strong looking day. We set the low right at the open and then clawed our way back. We continued on that in Thursday, where it looked like, okay, maybe we're going to go up. We were starting to come back down, but then the smart money comes in and they just take things higher, closing up above R2. We'll have to see what's going to happen on Friday. Is the smart money going to just lay back for a little while now and just let things continue in this sideways pattern? Or are they going to keep buying and show more upside momentum? Here's the 10-minute chart here, where we were looking positive right here, and things were looking pretty good. And then there was the initial reaction to PPI, and then we dealt with that and then ended up taking things higher as we were chopping around. This is interesting here from the initial overnight session to the pre-market session. Europe ended up being down, and that took the S&P futures with it, but then they were able to recover back from that. Okay, still looking good on this chart. Growth is outperforming value on an intraday basis. This goes back to the end of January, where we're seeing growth to value for the S&P. Also still looking solid here. End of day, growth was up. Growth had a good day. Everything had a good day on Thursday. It's kind of like a relief rally type of a thing, but it still hasn't kicked us into any kind of a trend. So growth was up, where value was also up, but up quite a bit less. It was up more for the mid caps and up more for the small caps. So our end of day charts for small caps showing some improvement here. We took down just a little bit with mid cap growth to value, but this is still looking pretty strong, even though the index, you can see here, we're just kind of drifting down with the mid cap index. A little bit of a decline here with the growth to value ratio for the S&P, but still overall strong. A little bit of an improvement between the growth and value ETF. We're coming up into the top end of the rainbow. That would help if this could continue to go up. Discretionary to staples, still looking pretty solid here. Saw a bit of a bounce that way. And we're still looking pretty solid with our large cap growth ETF, well above the 50-day moving average currently. But we're not trending. Still going down with the ADX. We could be trying to stabilize here. I mean, this thing can only go to 0, and it's at 9.78 right now. But at some point, this will turn and go back up, get above the moving average, and possibly get back above 20, where we're now seeing the green line above the red line. So that's turning us back to positive with this chart. Seeing that same thing in the short term, not trending, trying to stabilize with the ADX green line above the red line. And volume did pick up. We were just slightly above average here, but we've been dropping off lately. Here's sentiment. We are declining with the VIX, both with the line chart and the bar chart. And the VIX of the VIX also falling underneath its moving average. This is the volatility of the VIX. Still looking kind of down here with the momentum of the VIX as measured by the MACD. It is going lower, and that's positive. Still getting a high reading with the skew index up in this red area. The market's expecting some kind of a big move, and it just hasn't happened yet to bring this indicator back down. We did get the latest reading from the individual investors. They're more negative. Now, this was a week ago, and they tend to follow what's already happened. And they didn't like what happened here, so they're actually dropping down and looking negative. And the 50 period moving average is coming down as well. We declined with this fear gauge, and we declined with the other fear gauge. So we're seeing fear coming out of the market. Also coming back down, but still in the band when we look at volatility risk premium. Advanced decline line, not as much of an improvement as you might think. It was still good. We turned up based on price and volume, and longer term we're positive. But we're still negative here with the advancers minus decliners over the 10-day period. It still continues to decline. A little bit of a concern there. And we did improve with the new highs minus the new lows. The green really went up. The red really retracted, but we're still going down with the 5-day. We're trying to turn back up here with the 10-day. This is smart money indicator number one. We're clearly positive here. We're going up above an advancing moving average, but we might be getting kind of far away from the moving average. And we crossed back above here with the advanced decline ratio. We slipped slightly negative in the short term. Now we're crossing back to positive. And here's smart money indicator number two, continuing to go up. Could be getting extreme positive here, but for the time being, the histogram's going up and the red line's going up as well. And we're getting extreme with the chicken oscillator. We're well above this green line. So they're positive, but they're possibly a little too positive. And we did improve. We're still positive with the vortex. This had really been showing some weakness, but it turned back up on Thursday. And I haven't been showing the advanced decline lines because we've been just chopping around. If you look down here at the regular NYC advanced decline line, yeah, we went up, but we've just been really choppy lately. The cumulative advanced decline line is really showing an improvement there. And I'm not really showing any other advanced decline line charts right now because we're not really getting any insight from them other than just choppy sideways action. This advanced decline line study, though, is improving with the NYSE common stock, the S&P, the mid caps, and the small caps are coming back up to the moving average. Where we would had been turning negative with the Swenlin trading oscillator, now we're back to looking more positive. We're going back up slightly based on price, but we're still below zero, and we're above zero and advancing based on volume. We're turning just barely back positive with those stocks in the S&P above their 20-period moving averages. And we're back above 50 with the 50-period moving average study as well as the 100-period moving average study. And we're going back up with the 200-period moving average study. So there was some strength coming back in. We just need to see, is there going to be any follow through with this? Or are we just going to chop back and maybe decline on Friday and not really go anywhere? Here's the short-term chart. Not quite back to the all-time high yet, but well above the 50-day moving average. We're just barely above the moving average here when we look at volume. Going back up with the 20, 50, and 200 period moving averages. Starting to get extreme, showing pretty good momentum according to the Stochk RSI as well as the Williams percent R, the CCI 14, and the CCI 20. Just barely there. In the short term stochastic is looking extreme, turning back up, but not extreme in the intermediate term. Long term, we were already extreme positive, and now we're getting back up and looking even more extreme positive. Force index above the midpoint, that's positive. And the condition of the short-term trend, we're now above it a little bit. These lines are tending to go higher, but we're not really seeing any conviction, at least yet. We're above the 20-period simple and exponential moving averages here. And we're going into the +2 channel with our standard deviations chart. So that's positive. The balance of power starting to get extreme again, but that's still positive. And this redrew a little bit here. We had a blue, light blue bar here. Now we're turning back to dark blue with the go, no go. And getting up above the midpoint here with our highest high value, but we're not quite up to the blue line yet. But we're still seeing weakness here from the TTM squeeze. It continues to go down. It continues to be the darker shade of blue. We turned up, but we're still negative with the ease of movement. The Arun's just not, it's flatlining here. It's like comatose or something. The S&P McClellan oscillator was negative since it was below zero. Now it's starting to turn more positive, going back above zero. So it's really hard to see, but we could be starting to turn up based on price. And now we're starting to turn up based on volume with the summation index. And we had gone negative with the NYSE McClellan oscillator. That's now turned back to positive. So we're just kind of chopping around here, still declining a little bit based on volume. But if we see more follow through, this chart will show some improvement. Of course, if we see some downward action, this chart's going to start to look negative again. Momentum, when you look at the PMO by itself, we're still above the moving average, but we're below the moving average based on price. We're on top of the moving average based on volume. But we saw a little bit of an improvement with the PMOs that are rising. The buy signals continue to decline, and we're flat to trying to get a little bit better, just a little tick up with the PMOs that are above zero. But the momentum, these are a little longer term. This takes longer. Even our short term momentum can take a few days to swing one way or the other. The slope oscillator continues to be negative, and we're right on top of the moving average to slightly above it with the MACD. So we're going down with the slope oscillator, but our other short-term oscillator, the TSI, just ticking up a little bit, but pretty much flatlining. Flatlining with our intermediate term oscillators, still looking positive, but rolling over with the long-term oscillators. The Copic curve, another momentum oscillator, is still negative. The Shine Trend Meter coming up into this other green area now, just showing some good momentum. When it gets extreme is when it goes into this darker green area. And still above 50 with the money flow, also above 50 with the ultimate oscillator, still above the moving average with on-balance volume, positive with the Elder's Impulse system for the S&P. This was a big one. We changed back over to positive with the dot underneath with the parabolic SAR. And we never dropped below 50, either in the short term RSI 9 or intermediate term RSI 14. These are showing some improvement. The condition of the intermediate term trend still having a tendency to go up. Now we're above both lines, and we're above both the simple and exponential moving averages based on 50 periods. So we're above all the moving averages here. We were, even after the decline that we saw on Wednesday, now we're even further above the moving averages. But this is still negative. It improved. The bullish percent index, it went up, but it's still below its moving average. We're declining with the NYSE bullish percent index, and we're flat with the NASDAQ 100 bullish percent index. Not something you would expect to see on a pretty solid up day. And we did come down into the top end of this little mini rainbow, and then we bounced up out of that. The longer we can stay above this, the more the lines will continue to go up and be more positive. Longer term, though, we're starting to hit the upper end of this trend channel. That could be acting as overhead resistance. And we're looking more positive with our different ways that we measure trend here. We're looking positive with the Heiken Ashi. We turned back to black with the Kegi. That's positive. We never did turn negative with the Renko or the three-line break chart. Long term showing a little bit of an improvement, but just kind of bouncing around with our 150 and 200 period moving averages. We're still negative in the short term with the mid caps. All the other indexes are positive across the board, though. Bonds have turned to positive in the short term based on price, and we're still negative with the dollar. And we might, if stocks keep going up, we might see more follow through weakness with the dollar. All the sectors ended up being positive with materials, discretionary, which has been getting hit hard lately, tech, communication. These are growth areas. All three of these, we like to see them doing well, where the industrials and utilities were up, but up quite a bit less, in healthcare. That's more defensive. It was up less also. So we saw some green or blue right at the beginning, with discretionary having a BPI cross above 50. The NASDAQ got above 19.7, then 19.8, and then eventually 19.9. Had some negative things happening here. A BPI cross below 50 with healthcare, materials, and the NASDAQ, as well as the industrial sector. But then things turned back more positive. Healthcare went back above 50. We got above 6,100 with the S&P, and a BPI crossed back above 50 with the NASDAQ. So Started off kind of negative, and then as the day went on, turned more positive. And seeing an improvement here, but still a bit of a disconnect when we look at the weighted versus equal weighted version of the S&P. The Dow is up 0.77%, still pretty much range bound, but we've gone from negative to positive with the diamonds for the Elders Impulse system. Good day for the Nasdaq, up 1.5%, bouncing up off of its 50-day moving average. Also having a good day, but coming up to this R1 overhead resistance level with the Nasdaq 100. We're positive with the Qs when looking at the Elders Impulse system. The momentum flatlining, but still looking positive here with the Nasdaq 100. Small caps bouncing back up, but really not going anywhere. They've got a lot of damage to repair, as well as the Russell 2000 small caps. And we've gone from negative to neutral with the Elders Impulse system with the small caps, bouncing back up, but still below this pivot point, below its 50-day moving average with the mid caps, going from negative to neutral with the mid caps for the Elders Impulse system. The Wilshire, a broad market measure, looking pretty solid there, as is the total U.S. stock ETF. Financial sector up 6% here, not back to an all-time high, but still looking pretty good. The FANG index setting an all-time high here on a closing basis, up almost 1.5%. Those are the big stocks, and that's really what led things higher. Apple was up almost 2%, coming back up to its 50-day moving average. Amazon still dealing with its 50-day moving average, but it was up. Microsoft was up, but below its 200-day moving average. Meta setting another new all-time high. Google was up, still under its 50-day moving average. Nvidia coming back up to its 50-day moving average was up over 3%. Tesla bouncing back up after it's been under pressure lately, but still in between its 50 and 200-day moving averages. Netflix setting another new all-time high. And not really seeing much of a change here with US versus international stocks on a short-term basis and leveling out here with the longer-term correlation. Still in the low 70s with oil, dropping down below the 50-day moving average with the dollar. So if stocks keep going up, we might see more weakness here. And we did drop with the 10-year yield. We're still above 4.5%, but coming down did give support. We were up with bonds based on price. We're keeping an eye on the 10-year yield in Japan, and that's continuing to go up. So is that going to be a big deal at some point? So far, it may be a big deal to folks in Japan, but it hasn't gone global, at least yet, if this continues. Seeing a little bit of an improvement here with the Qs to S&P ratio when we look at our growth to value ratios overall. Ticked up, but still below a declining moving average with discretionary to the S&P coming back up to the moving average with large cap growth versus value. So we're underneath the declining moving average with the large caps, coming down, but still above an advancing moving average with the mid caps, coming back up to the moving average with the small caps. And we're seeing this too, the staples to S&P ratio. This going up is a little bit of a concern, but we're not seeing an overall shift in the trend. So what's our outlook for Friday? We are positive, but we're still not trending. The smart money indicators are quite positive right now, but possibly looking extreme. And of course, with the update, we are seeing some of our charts improve. We're going to get retail sales, import, export prices, as well as industrial production and capacity utilization on Friday. And then wholesale inventories will be coming out. I mentioned a lot of the geopolitical things before. It's like nonstop excitement for things that can happen, whether it's considered positive or negative. And here we're finishing out the economic calendar for the week. This is what the last readings were for Friday's session. Seasonality, we're neutral to negative with the Dow, but we are flat out positive with the S&P and Nasdaq for Valentine's Day. And we're starting to finish up with the first half of February, which tends to do okay, but the second half of February can often be rather negative. And this also shows that in a post-election year, February is the worst performing month. This is updated a little bit. It says the second half of February can be trouble. It had a different headline, but it was the same chart where we're coming into the first half and that'll be finishing up. And then this can often be negative. We don't know if it'll play out that way, but we just want to be aware of this. And this is the post-election year Carson chart showing that February is the worst month. Then the warning signs, I didn't do the equity put call, so I didn't change any of those. The Copic curve is still negative, and the ease of movement, even though it improved, is still negative. And we have a pretty long list here on the positive side with our smart money indicators looking good, but possibly extreme. The growth to value ratios, the discretionary to staple ratios, those are still holding up. And again, the equity put call, the advanced decline lines did show some improvement. We're back to looking positive with the S&P and NYSE McClellan oscillators and summation indexes. Momentum is still weakening though. It's going to take a little bit more than one solid update to switch that back over to positive. We are looking better with the Swenlin trading oscillator. The parabolic SAR is now positive. The vortex is improving. The money flow and ultimate oscillator are positive, and our moving average studies, which the 20, 50, and 100 had dropped below 50, and that's when it turns negative. Now they're back above 50, so that's turning it back more positive. Financial sector is positive, and the momentum for the Nasdaq 100 is still positive. So our conclusion, we're positive, we're not trending, we're keeping an eye on the smart money indicators, but they're looking extreme, and we're seeing some signs of improvement, and that pretty much bleeds over into the short term. In the intermediate term, we're still not trending there, but we are seeing signs of improvements. But if we have a down day on Friday, we could switch back to showing weakness again, and we're still positive in the long term. Thank you. I hope you found this helpful. Have a wonderful day, and I will talk to you in the next video.